Hey, what's going on, everyone? This is Sam Kwak, one of the Kwak Brothers here, and today we have an amazing and awesome guest, Mark Kohler. He's a CPA attorney, best-selling author. I mean, the list goes on and on. I mean, the list of news networks he's been on, the newspapers, magazines, just to name a few. He's been on the Wall Street Journal, Entrepreneur Magazine, Forbes. I mean, it goes on and on. So, Mark, so pleasure to have you, and we're so glad to have you on the webinar to talk about the new tax bill and how it will affect us, the real estate investors. So the people that are watching this particularly are going to be real estate investors, either looking to get started or have been starting and making a ton of money. So Mark, you've been a phenomenal help in my life and my brother's life and saving taxes. What are some three big things that you see are going to change the way that us real estate investors will be doing business in terms of taxes and legal?
Wow. All right. Big question there. And I know we're going to try to do this in 15 minutes or less. And I want to say thank you, Sam, for helping put this together. It's an honor to be with everyone tonight. Today, whenever you get a chance to watch this, because I know it's going to be broadcast in several methods. So, okay, well, let's jump right to it. Now, for a couple other credentials quickly that I want to mention is I am a CPA, certified public accountant, and a lawyer. That doesn't mean it's going to be boring. I want to keep it real. So I want to say thanks to everybody for watching, and don't scroll past this. Take the chance to get through this because I know it's going to help you a lot. And Sam, I'll see if I can come up with three major goals. Let's first talk about the tax bill, if that's okay.
Yeah.
And just kind of put it in perspective, and then we'll zoom in on the real estate investor piece of it, if that's all right.
Yeah, absolutely.
Okay, so this new tax legislation, this Tax and Jobs Act that came down, there's three main pieces to it, folks, and this is what you want to know. There's kind of an individual section, and then there's a small business section, and this is where the real estate investor, you're going to be impacted quite a bit, and then there's the corporate section. Now, you've heard a lot about this in the news. The corporate section was the big deal. They wanted to help the Amazon, the Targets, the Walmarts of the world, and they've taken a 35% tax rate and axed it down to 21%. Also, there's about 300 pages in this tax bill of trying to help corporations bring more jobs back to America, foreign tax policy, blah, blah, blah. You don't want to read that part. It'll put you right to sleep. Point is, hopefully there's some trickle down, and it affects you and me, the average American, and we see better jobs, better pay, and lower prices at Walmart or Target. We'll see. Okay, so that's this section. And that was probably really 70% of the tax bill. The rest of it, they had to sell it to the American public. So you and I, as individuals, we're going to see some pieces here, and then we're going to see the small business. Now let's go over to the individuals, because everybody, we're all individuals at the end of the day, and how is it going to affect us? So for many of you out there that do have a day job, and you've got a W-2, and you're doing some real estate investing on the side, you might see an increase in your W-2. That's a possibility. The IRS is sending out a bunch of new tax tables for employers and payroll companies so that your W-2 is adjusted. The average savings for 80% of America, we're going to see savings, 80% of Americans. So many of you listening now, you're going to see tax savings. The average savings is going to range from $1,000 to probably $7,000. This is where you're going to see it on your tax refund next year, maybe in your paycheck, or as a small business owner, you're going to even see more savings. So we're going to come to you, the real estate investor, here in a moment. But for all of us, we're going to generally see this. And the reason why is we've seen tax rates are going to go down. That's one piece of this. And also the standard deduction has been doubled. So standard deduction has been doubled, which is kind of a big deal. And finally, there's a child tax credit. These are kind of the big pieces of this. So I want to make sure you guys can all see that there. So child tax credit. So without boring you, a combination of all this is what's generating this tax benefit. So this is what you're going to feel on the individual side. Now let me just give one last little point on the individual side. There was a few things that got cut. The moving expense is gone. There's itemized deductions. If you itemize, now 80% of Americans don't even itemize. And so if you're an average middle income American making between 50 to 150 grand, this standard deduction is what's going to save you. And you're not going to itemize your medical or your charitable or your state and local or your property taxes. You're just going to leave that alone. You're going to see savings. So this is kind of the individual side. Now, at the end of this little presentation, I'll ask Sam if he has got a couple other questions to throw out there. But here's my final point. A lot of people think, oh, I can file my tax return on a postcard now. No, you're still going to have to file a tax return. You're going to use some software or use a CPA. And if you're a real estate investor, you're going to want to have an accountant helping strategize for you, because you're going to see there's some neat planning opportunities. But for some of you out there that maybe have a simpler situation as you're starting to build your real estate portfolio, you're not going to file with a postcard. You're going to still file and try to get your refund as quickly as possible. So over the next few weeks and months, January, February, and March, you want to get engaged right away, do your taxes as normal. If you're a real estate investor or whatever the case is this year, this really doesn't take impact on your tax return until next spring in 2019. That's right, folks. This is effective 2018. So for some of you that have a W-2, you might feel it in your paycheck, but it's really not going to hit until you get your refund next spring. Okay, so there we go. Now, what I want to talk about now is the real estate investor business. Because if you're a real estate investor, you're in business. So what does this new tax bill do for you? Now, this is going to be really important for all of you. Let me put this in perspective. And Sam has heard me and seen me do this 100 times, and it's so important. So if you haven't been reading or following me in Mark Kohler Doctrine, and here's my new book that just came out. I've got 4 books out now. This is my newest one, The Business Owner's Guide to Financial Freedom. And this is about saving taxes and building wealth. We'll talk about it more in a minute. But here is what I do when I talk to real estate investors. And this is what I want you to be thinking about. As a real estate investor, you're going to have 2 sides to your life. Yin and yang, 2 sides. And you might have both in your life at the same time or just one. The first side is your operations side. Some of you out there are real estate investors, are doing fix and flip. You're doing wholesaling. You might even be a realtor or a broker. You might be doing some rehabbing, right? And this is short-term operational business. This is a standard operating business. And others of you are doing investing. And this is creating passive income. And passive income is typically going to be through doing rentals. And you're going to have rental properties. You might have single-family homes. You might be doing commercial. You might be doing subject twos and all that. Now, this whole thing, guys, this is having a business. Now, reason why I bring this up is how you structure is how you're going to save taxes and keep it simple for asset protection. Don't get sold some Nevada corporate entity or going out and setting up in Wyoming, and be careful running to LegalZoom and just click, click, click. I have an entire service at my law firm called Fix My LegalZoom Entity. I have 2 employees. All they do all day long is fix people's LegalZoom entities because they went online. So I want to give you a couple basics and then wrap it around this new tax bill because it's going to be awesome for you. So when we talk about short-term income or ordinary income and versus passive income, and this is where the new tax bill is coming in. So Sam, hang tight. You're going to love this because this is going to bring it all together. If you're doing long-term rental real estate, you're usually going to have a combination of one LLC with multiple rentals. Maybe you have an LLC for every rental. I don't know. Or you may even have a parent LLC that owns all your baby LLCs. And there's all sorts of ways to structure this. Don't overdo it. I talk about these in my books. I'll give you my website here in a little bit. I want you to follow my newsletter. It's free. And I'll be helping you with some free guidance. I have 5 attorneys, 10 CPAs. We're helping clients around the country keep it simple. Now here's Sam. This is the important point for all your followers right off the bat.
Yep.
The new tax bill has no effect on passive investing. No effect. There was no changes to the depreciation schedules. There was a lot of talk about that. But the House and Senate version, when they got together, there was no change. So if you're a real estate investor doing passive investing, and you maybe are a real estate professional, maybe your spouse is, I've got all sorts of strategies there, no change. Where the change is for all of you out there doing real estate deals. Now there's two worlds on this, and I want to zoom in on option 1 and option 2. So I'm going to take another sheet of paper here, and I'm going to blow this up. So as we look at ordinary versus passive, don't worry about the rental properties. One of the mantras I've been teaching for years as a CPA around the country is buy 1 rental a year. Even if you have a day job, you could be in college, you could be 80 years old, you could be 18 years old. I want you trying to buy 1 rental a year. Another topic for another day. Hopefully Sam will have me back. But over on the ordinary side, this is where you're fix and flipping, you're rehabbing, you're a realtor, you're a contractor, you're a handyman, you're flipping, wholesaling. That's this world. And this is where the new tax bill, the GOP Trump tax bill, is going to save you. But you got to do it right. So in this ordinary side, we only got a few more minutes left. So I'm just going to introduce this to you, and then I want you to study up on it. Okay. As I look at option 1 and option 2, because we're zooming in on it. Option 1 is if you're a personal service business. This is a big part of the new tax bill, a personal service business. This would be my realtors and brokers. There's a special rule for realtors and brokers, all right? Then there's a different rule for regular service businesses or products. Now this would be a contractor. This would be for some of you that are doing rehabs, fix and flip, maybe even wholesaling. You've got a different equation. Isn't this weird? Sam, you didn't even know this, I know, because we were talking.
Don't you?
This ordinary side.
Yeah,
Normally we do an S corporation. There's now 2 worlds that we have to worry about. And this can save you big money. So if you're a wholesaler, if you're a contractor, rehabber versus a realtor broker, if you're on this side of the world, what do? Now, on this strategy, now I've got to back up for a minute, and I'll explain the 2 structures of what it looks like. We're almost done, Sam, I promise. Everybody, hang tight. I want to save all your money. If you're out there, anybody, and you're a realtor or a broker, or you're a contractor rehabber, and you make, let's say you bring in 150 grand, and you spend 50 grand on all your expenses, and you're killing it, and you make 100 grand. Folks, you've got to pay self-employment tax of 15% right off the bat. That's 15 grand. Then you get this new tax bill deduction, and you've also got to pay your state and federal tax. This is ugly. We do not want you to be a sole proprietor when you're rehabbing, fix and flipping, or a realtor or a broker. This is bad. I want you to be an S Corp. And when you're an S corporation, when you make the same 150, you spend the same 50, you net the same 100, there's no self-employment tax. You take a little bit of a salary, and everything else flows through the bottom.
Right.
And this is where you then pay your state and federal. Now, folks, with this foundation, when we come back to the new tax bill, and you've got your S Corp, see what I'm saying? On everything you net as a contractor, this is huge. After you take your salary and save on self-employment tax, because we want to save on that right off the bat. In fact, I should have showed in this example. If you take a salary of like 30 grand, you're only going to pay 4,500 in tax rather than 15 grand in tax. Folks, I just saved you 10 grand. So you want to call my law firm and say, Mark, I want you to walk me through this, set up my S Corp. We only charge $800 around the country to do this. But we set up an S Corp, you talk to a real lawyer, and you set it up in the right freaking state, not Nevada, unless you live in Nevada. So this is the piece that could save you $10,000. Then, on top of this, when you have your S Corp, whatever you net, in this example, you would have netted 70 grand, you get a 20% deduction. There's no separate rate. There's no separate rate. It's just a deduction. So you get to write off another $14,000, and then you pay taxes on 56. So this is a big deal. This is where the savings is at on top of the S Corp. So it's like a double whammy. It's like boom, uppercut. That's what this is all about. And it's only limited by 50% of whatever your wages are. So that's really cool. So if you have a lot of employees working for you or your own wages, you have to limit it by 50% of wages. Or you get a 20% deduction off the bottom, whichever's less. Guys, that is huge. So Sam, that's a big piece here for our fixers and flipper real estate owners out there. Finally, if you're a realtor and broker, it's the same rule, but it phases out. It phases out at 315 grand if you're married, or 147 if you're single. I'm doing this off memory here. I've been reading this crap for weeks now. But you're phasing out around 300 grand married, 150 single. If you make more than that, you don't get the deduction, which kind of sucks.
Right.
But this is for realtors, brokers, attorneys, CPAs, dentists, doctors, athletes, actors, actresses, engineers. If you're in a personal service business, it phases out. But for you rehabbers and fix and flippers, no way. It does not phase out. So here's the bottom line point, and then Sam may have a question or two. Folks, you want to understand this. You want an architect that can bring your tax return together affordably and save you thousands. Right. You don't want to hack this out on LegalZoom and TurboTax. You're going to graduate to a new level when you're a real estate professional, because you're going to have both worlds going on, guys. You're going to have rentals and your S Corp, and you want to find the balance and dial it in and freaking whamming, knock it out. So, folks, this is what it's about. And I just want to say in summary, if you want more info, my newsletter for free. Let's see, where can I write it here? It's an easy spot. In fact, I'll just put it right here at the top. Oh, man, I've got so much paper here. I'm just going to throw it out here. My website, let me just throw it out, is markjkohler.com. Maybe Sam can put it down there in the piece. But markjkohler.com. Sorry, I'm just using so much paper here. I'm killing trees. markjkohler.com. I've got a free newsletter every week. I've got a video that comes out every week, articles, and I keep it simple, stupid. KISS strategy. I want to keep it simple, folks. I want to save you thousands. I'm not going anywhere. Get to my YouTube channel, 70 plus videos. And you want to follow an advisor, a leader like Sam. He and his team have a tremendous amount of education. I teach a 2-day class in Sam's courses. You can get access to it immediately. Right. Talk to him about it. You can also get my free content that freaking rocks, but you're going to eventually want to dive in and really get into it. So talk to Sam more about that. My new book, Financial Freedom. Yep. Awesome. Check it out on Amazon. I've got 3 or 4 books. Any of those are going to rock your world. So Sam, there you go. I hope that rocked it. Woo!
Mark, I mean, honestly, I'm honestly impressed. I'm surprised because you gave more than what I was really expecting. I thought you were going to go, you're going to give us some golden nuggets here and there, and then that'll be good. But Mark, you really wrapped this around, perfectly like a Chipotle burrito, and I think this is great. So I don't think I have any other questions other than, hey guys, for those who are watching this, whether you're watching this recorded or live, definitely sign up for Mark's newsletter because it's been reminding me of different tax deadlines that I have. It's also got tips. I know Mark also released several weeks ago on articles that has to do with relevant investing ideas. So guys who are watching the recording, definitely check it out and definitely check out Mark's book. I think you guys I got mine on order on Amazon on e-Kindle. So this will be great. So thank you guys. Oh, here's my mentor, Scott.
Woo!
It's Scott Rowe.
What? These guys look like they're in Siberia. What's the temperature there in Illinois, man?
It finally got up to 9, but when I woke up, it was negative 15.
Yeah, we're freezing to death here, Mark. So, all right. For those who are watching, thank you so much. Thank you so much, Mark, for being with us live. And yeah, I can't wait to see you when you come back to Chicago. But for those that are watching, definitely check out his newsletter, his website. I cannot thank Mark enough for how much money he saved me on taxes over the last 3 years. So thank you, Mark.
Sam, thanks so much. Thanks for having me. I was just on WGN Chicago last week. and I'll be out in Chicago in March, right there at your
Perfect.
office. So,
All
hey,
right.
who doesn't want to go to Chicago in March, right?
It's a little warmer, so yeah. All righty. Thanks, Mark.
Thanks, man.
All right.